Today is April 23. It is a Sunday, so the market is closed. And we wanted to go over Google Alphabet because earnings is coming up. That's in about 2 days, April 25. And we wanted to go over these unusual options that give us 3 reasons why we think Google may go down after earnings. So currently, these options that we're seeing, there was 3 sets of them, and we'll go over all of these here. Here we go. The top 3. Okay, so let's start from the big one here, the 7,500 one. Okay, this one here, you'll see here on the May 19, this one here is at the 100 strikes. You'll see here that this here volume at 11K is slightly above open interest. It could more than not that they are opening orders, but this one is less. The call size is less, so it could possibly closing orders. So we're going to have to monitor this one, this strike. But we believe what's going on here, if they are open orders, and we believe that they're actually buying the 100 strikes and then selling the call side. And what that actually does is create a synthetic short where the current price at 106, if it goes down, it will be profitable because this is above that profit loss zero line. And so this is a synthetic short. Again, we will have to make an update if this is incorrect and these are closing orders. We'll find that out as more data comes in tomorrow. So make sure you are subscribed, hit the bell icon so you'll be notified when we see new data coming in. The second reason here, these other options, these 3,529 of them, these were done on May 19, 85 strike calls and puts. So what are these? These are over here. You'll see the 85 strikes here. This 4,000 here is less than the open interest. However, here it's greater. Okay, so this is much greater than that 176. So these are opening orders. So we believe they are selling the 85 strike calls and also selling the 85 strike puts. They're selling a straddle to take advantage of the higher volatility right before earnings. And what this does is when you look at this, this straddle will benefit if the price from 106 also goes down because their max profit is here at $85. So their profit here is up here per contract. It's above zero. So you'll see that this is also a short position as well. Okay, and so now let's go over the third one. So the third one here is the May 26th. It's a couple of contracts, but they're all done at the same time. You'll see at 149, right? And you'll see that although it shows it's green, keep in mind that the bid-ask price is very narrow. You see how it's 176 to 177. This is a penny wide. This is so narrow. And if you haven't watched our video on what these colors mean, we'll put that link at the top here at the info cards so you can watch that video. But in summary, the colors don't necessarily mean buys or sells in this case, because this bid-ask price, this market here is too narrow to tell. And so what we think it is actually more likely that it is a sell. And the reason is, if we look at that 149 of what happened at 149, we don't, we think if you go down to the 149 time frame, right? We go all the way to 1349. You'll actually see here that there was a lot of these 113s, right? And this was the market. It was at 178 was actually the low end at the bid price. So they were being executed at the bid here. And so as we go down in time from 26 seconds and start going down 34 seconds, this is all being sold at the bid, transacted there, right? And then it goes down, down, down. In time, 35 seconds, suddenly 8 seconds here, we get that big 1,000 of them, and then 700 of them, and 700 at this 177, right? So the market here had shifted down, right? And just a few seconds ago, the market was actually at the 177 was actually, see, they were getting all these 177s, they were at the bid price here, right? This market they were transacting their sells. And so when this large order came in, it also got that same amount of price, right? So we believe that this is actually not buying the 113 calls, but selling the 113 calls. And so that's more of a bearish indicator that they're selling, that they don't think Google will rally past 113 since it's a sell order. So, and let's kind of zoom out a little to see where Google's been. So you'll see here, it hasn't really gone up to 113, you'll see here. So, yeah. And so that's, that's our thoughts on Google and our 3 reasons based on these 3 sets of unusual activity, why we think Google may not rise. Instead, it will drop for earnings. We don't know how much, or if it does rise, we don't think it will rise past this 113 mark. And so that's our kind of current analysis. But again, things can change as we get closer to earnings and as more people put on more earnings type trades, especially the large institutions. And so we'll be watching those. So make sure you are subscribed and hit the bell icon so you will be notified as soon as we see these unusual options come on the tape. Thank you, and good luck, everybody.